Good day, everybody. It's Greg Schnell, and I am here with your Daily 5. So, the first chart I want to talk about is crude oil, and I use crude oil for a lot more than just the price of crude. For me, it's a really important economic indicator, and what I want to make sure of here is crude oil is acting well. We expect there to be a shortage of crude. We expect the crude chart to turn up meaningfully here and start to take off to the upside. In contrast to that, we have the Federal Reserve trying to slow down the economy. And the question we're up against right now is, if that happens, will that dampen crude demand? And currently, we have more than enough crude demand to keep the whole system relatively tight. So the administration has been using the Strategic Petroleum Reserve to try and manage that demand force and try and stop the price of gasoline and fuel, heating oil and diesel fuel from rising. So what we want to worry about here is if crude starts to break down. To me, that's going to tell me that we are expecting a severe recession, and we really need to respect that. So I do not want to see crude oil start to underperform the S&P 500. Now, if the S&P 500 goes down, obviously that makes it easier for crude oil to hold up, even if it just stayed flat. But if we start to see crude oil moving down here, it just tells us that we're not, that traders are way more worried about a global recession. And Amazon indicated quite a bit of problem selling in Europe, their goods, and said they were starting to see it in the US. So that might lead to some issues with crude oil here. So I don't want to ignore this chart. The big uptrend off the 2020 lows has already been broken. We're kind of hanging around that level. We have a downtrend that we've broken but haven't really moved anywhere since we broke it. And then we also have this big, I'll call it 2-year long trend line here that we want to watch. And if this starts to turn down, that's a concern for me. I like the fact that my PPO is trying to turn up right here. And so I'm watching crude closely. To me, it's a real flagship for how hard this economy is going to get hit by the recession. And if it's a soft one, then crude should hold up. So XOP, the Exploration and Production ETF, this one's quite interesting because we're challenging the highs again. And even though crude was up on Thursday, what we saw was some of the oil stocks took the day off. So I want to make sure that this has the power to break out here. It tried to push through this 152.34, which was from back in August. And you might remember when the market kind of rolled over there together, crude rolled down, and so did the exploration and production. So this is a pretty important place for me here. I don't want to see this fail. We did get a PPO buy signal this week, which is comforting. So it's one of the areas that has been strong in the markets, and we did see some of the oil charts break out. We need to see that continue. But if there's a larger recession, I would expect that these stocks start to get sold as well. The US dollar has been on fire, and I have a couple of things that are starting to change on that chart, which makes me think that perhaps we are going to be able to work our way out of this. And if so, then the US dollar should give us some reprieve for a while. It could go a long way down just to get to its 40-week moving average or 200-day moving average. It would be another 6% below from here. And what I'm watching is this big 2-year trend line on the US dollar momentum indicator. And I want to see this start to break down. Now, as long as it's above zero, it's still a positive force. It has positive momentum. But if we started to see a weakening of that momentum, that would be kind of critical. So that's what I'm focused on for the US dollar. And I want to make sure that if the dollar starts to let go, then that could be an opportunity to move into trades like EWG and EWQ, which would be trades for Europe in US dollars. But what happens is as the US dollar starts to fall, then those trades would actually do relatively better. So some people will say start investing in Europe because Europe's outperforming. Well, it's not that Europe's outperforming, it's that the US dollar is starting to change and those charts are starting to take on a better look. Hasn't happened yet, but definitely something I want to watch. And this 2-year trend line is the real clue for me If this is going to start to break down, that's telling me something that I really want to pay attention to. And we have this little short, call it 2.5 month uptrend line from the US dollar outperforming the S&P 500. It's not a lot. I'm way more worried about this big momentum trend. And if this starts to change, if you have a 2-year change in trend, usually that's meaningful, and we'll see the chart kind of give back quite a bit. If that was the case, then I'd really want to be starting to look towards commodities as well. So one of the other areas that should work out well is when you're in the early recession phase, according to the Sam Stovall model for sector rotation, is financials should start to do well. We, on this chart, have a really interesting setup here where we've got a big, long 2-year trend line for Bank of America. We're making higher lows on the October low in terms of momentum than we did in July. And if we could start to see this breakout to the upside, this might mark a meaningfully big move. Now, JP Morgan's already moved almost 25% off the lows of 2 weeks ago, so that's a pretty heady rise. So maybe this needs to come up, pull back a little bit, and then gets to take off to the upside. But I want to be ready for these banks, because I think if they do start to move and you can get the chance to really catch part of their acceleration, they can move up quite meaningfully. So back in November, when the vaccines came out, this was trading in around, call it 22, 23, and went all the way up to 42. That was an almost double in about 6 or 8 months. So a really heady move. Right now, with the interest rate spreads being so high, we could see these banks meaningfully make money. And my last one is Charles Schwab. And the reason I picked Charles Schwab, I really like how this chart really hasn't broken down now. So we have an important character change here that we need to be aware of. If I'm wrong and the chart starts to fail, this is the decision point. And what we'd start to see is we'd have a left shoulder ahead and a right shoulder, and this fails, and we start to break lower. PPL momentum indicators coming here. It's coming and trying to get back above. And this to me is almost like a light switch. If this chart breaks out, you want to be involved. If this chart turns down, you probably want to use it as a bigger warning for a major, a more significant market topping structure that we should heed the knowledge of. And by having one of these dips below zero on the momentum indicator and then unable to get back positive, this is a pretty important clue. So if we go back and look at the Bank of America, it's similar, except we don't have such a nice head and shoulders structure to work with. Anyway, so that's one of the things that I want to watch for. Now, if you're interested in the work we do at Osprey Strategic, I do want to encourage you to go over there. I did produce a video, and I'll jump over to that chart right away here, or show you where you can find it on the website. My strength index is currently at 78%. We use that to try to help us figure out when to be in the market and when to raise cash. So I'm just going to jump over to the website. So it's ospreystrategic.org. Under free tools, articles, and videos, there's an article here that talks about the Osprey Strategic Overview, but it also talks about how we used that to find the lows in the current on October 13th, and then how it's rallying up and what we want to watch for and how that behaves. So if that's of interest to you, I'd encourage you to go there and see if that works. And with that, thank you for taking the time to join me, and good luck with your trading. Best wishes.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.